Got consumer sentiment here crossing the tape. Let's get to Rick Santelli. Hey, Rick.
Good morning, Carl. Yes, these are the January final numbers. So we take the mid numbers, we toss them, and we now make these the final read. 68.8 expected. Well, 67.2. So we take that mid-month read, which was 68.8, and we move it down to 67.2. Sequentially, that follows December, which was 70.6, and it's the lowest level since November when it was 67.4, Carl, and that was a 10-year low. If we look at what the current conditions are, 72.0, and sequentially, of course, that will take away the read of 73.2, the mid-month read, and 64.1 replaces the mid-month read on expectations at 65.9. So we digressed on all the metrics. Now, one-year inflation, the mid-month read was 4.9. It remains at 4.9, which happens to be a 13-year high going back to 2008 before you can find a higher level of one-year expected inflation. And on the 5 to 10-year inflation outlook, it remained at 3.1, the mid-month read, and that was the highest in 10 years going back to 2011 before you can find a higher level than 3.1%. We see that the maturities most normally associated with high rates, like short maturities, 2s, 3s, 5s, 7s, their yields are actually a bit lower on the day. And if we look at 20s, 10s, 30s, they're all a bit higher in yield, a little bit of curve steepening. Not much, but 2s to 10s now, it's hovering 1.5 basis points steeper than its 15-month flattest level it closed at 61 yesterday.